What if I told you that while the stock market has grown 10% per year on average, Bitcoin surged 230% in 2020 alone? These mind-bending numbers have investors worldwide asking one crucial question. Should I invest in stocks, cryptocurrency, or both? Picture two parallel universes of investing. In one, you're buying tiny pieces of companies that have existed for decades, some even centuries. In the other, you're investing in digital currencies that emerged just over a decade ago. Welcome to the fascinating world of stocks versus crypto. Let's start with stocks, the grandfather of modern investing. When you buy stocks, you're purchasing actual ownership in real companies. Think about it. Owning shares of Apple means you literally own a piece of every iPhone sold. Companies like McDonald's, Disney, and Microsoft have been creating value for shareholders through tangible products and services for generations. The stock market operates under strict regulations, with companies required to provide transparent financial reports and follow established accounting principles. This transparency helps investors make informed decisions based on real business performance, revenue growth, and profit margins. When you invest in stocks, you're betting on human innovation, business acumen, and economic growth. But then came cryptocurrency, bursting onto the scene in 2009 with Bitcoin. Crypto represents a completely different approach to value and investment. Instead of buying shares in companies, you're investing in digital currencies built on revolutionary blockchain technology. These digital assets operate independently of traditional financial systems, offering a degree of freedom that's both exciting and terrifying. Cryptocurrency advocates argue that digital currencies represent the future of money. They point to features like decentralization, meaning no single entity controls the system. Transactions occur directly between users, without banks or governments acting as intermediaries. This peer-to-peer nature has captured the imagination of millions, leading to explosive growth in crypto markets. However, the differences between these investment types go far beyond their basic structures. Stock markets typically operate during set hours, closing for weekends and holidays. Cryptocurrency markets never sleep, trading 24/7, 365 days a year. This constant activity creates opportunities, but also means prices can dramatically change while you're sleeping. Risk and volatility paint another striking contrast. While stock markets certainly have their ups and downs, they generally follow more predictable patterns based on company performance and economic conditions. Crypto markets can experience wild price swings in minutes, with some coins gaining or losing 50% of their value in a single day. Consider this: major stock market indexes might move 1% or 2% on a volatile day, making headlines. In the crypto world, a 10% daily move barely raises eyebrows. This volatility represents both the greatest appeal and the biggest danger of cryptocurrency investing. The potential for massive gains comes with the risk of devastating losses. Regulation plays a crucial role in these markets too. Stock exchanges operate under strict oversight from government agencies, providing investor protections and market stability. Cryptocurrency markets remain largely unregulated in many countries, operating in a kind of Wild West environment where scams and market manipulation can occur more easily. The investment approach differs significantly between these assets. Stock investors often focus on fundamental analysis, studying company financials, market position, and growth potential. Crypto investors typically rely more on technical analysis and market sentiment, as traditional valuation methods don't easily apply to digital currencies. Both investment types offer unique advantages. Stocks provide ownership in profitable businesses, often paying dividends to shareholders. Some companies have increased their dividend payments annually for decades, providing reliable income streams. Cryptocurrencies offer the potential for extraordinary gains and serve as a hedge against traditional financial systems. Storage and security present different challenges too. Stocks are typically held in brokerage accounts with multiple layers of institutional protection. Cryptocurrencies require careful management of digital wallets and private keys. Lose your private key, and your crypto investments could be gone forever, with no recovery possible. The future outlook for both investments remains compelling but uncertain. Stock markets continue to evolve with new technologies and business models, while maintaining their fundamental role in capital formation and wealth creation. Cryptocurrency and blockchain technology promise to revolutionize finance, though the exact path and timeline remain unclear. Smart investors increasingly recognize that stocks and crypto aren't necessarily competing investments. They can complement each other in a diversified portfolio, each serving different purposes and offering distinct advantages. The key lies in understanding the unique characteristics, risks, and potential rewards of each asset class. Remember, successful investing isn't about choosing between stocks and crypto. It's about understanding how each fits into your overall financial strategy. Whether you prefer the steady growth potential of stocks, the explosive possibilities of crypto, or a carefully balanced combination of both, the most important factor is making informed decisions based on your own goals and risk tolerance.